Hello out there. Anders Johnson with CMG Home Loans, and this is part 2 of my education series entitled 5 Myths That Prevent People from Becoming Homeowners. So let's jump right into number 1, which is my credit isn't good enough. And quite frankly, it might not be right now. But what's more important is developing a plan through the tools that I have at my disposal, including a credit rescore, to give you that plan to get that credit score up so that you do qualify down the road. I've had several clients that I was able to use these tools, including the credit rescore for, got their credit score up, and they were able to qualify. So don't let that be a deterrent for not applying because you feel that your credit isn't good enough. And in some instances, it might be, and you just don't know it. Number 2, I don't have a down payment or enough of a down payment. This is probably one of the more common ones. First of all, loan programs, most of them require at least 3% of the purchase price as a down payment. Some are even allow 0%. But down payment can come in a variety of ways. It can come from your own funds, if you have a retirement account, if you get a gift from a relative. We also have our Home Funded program, which is behind me, which allows you to crowdfund your down payment through a variety of donors. And as I said, down payment assistance programs are available statewide. Every state has down payment assistance programs, so it's my job to help you discover all of those options as well. Number 3, I have too much debt. Again, similar to credit, you might at this point in time. One of the key things that we look at is your debt ratio. Your debt ratio is your monthly debts, usually what appears on credit, along with the proposed mortgage payment divided into your gross monthly income. Now, in terms of that, if the debt ratio is too high, again, we develop a plan to try to get that debt ratio down. Whether that's, either paying off debt or whatever the case may be, we can devise a plan. So again, don't let that be a deterrent for not applying. Number 4, I haven't been in my job long enough. Probably the key thing is not necessarily how long you've been at your job, but more how long have you been in the industry. Okay, so if you are, let's say, a nurse or a doctor, and you switched hospitals, okay, but you've been a doctor or a nurse for 10 years. Nobody, as far as underwriting or loans, are going to penalize you for, having to switch jobs or getting a job with higher pay, as long as it's relatively in the same industry. If you went from a construction worker to working at McDonald's, that might be different, but generally speaking, we like to see 2 years on the job, but that certainly is not a black and white guideline that you have to be. And finally, number 5, I was denied at another lender. You hear this all the time, and I've helped people that were actually turned down at another lender. Lenders have different guidelines. Some lenders have we all have base guidelines. But some lenders actually add their own guidelines on top of those base guidelines, and that's what makes lender guidelines sometimes different. So just because you've been turned down at another lender does not mean you do not qualify now. So in closing, I hope that helped dispel some of those myths, and if you're one of those that had believed in those myths, or if you're just looking to see what your pre-approval options are, I welcome you to contact me at 651-890-6593. You can also text that number, and you can email me at andersj@cmgfi.com. We'll see you back here soon for part 3 of my education series. Until then, take care.